Internal Revenue Service IRS tax news. Get ready to file taxes. What to do before the tax year ends. COVID Tax Tip 2020-162, November 30th, 2020. There are things taxpayers can do before the end of the year to help them get ready for the 2021 tax filing season. Below are a few of them. Donate to charity. There is still time to make a 2020 donation. There's a link to 2020 donation here. Taxpayers who don't itemize deductions may take a charitable deduction up to $300 for cash contributions made in 2020 to qualifying charities. So traditionally, the deduction for charitable donations has been an itemized deduction. It still is, but there's a $300 deductible component to it that does not need to be itemized. So you can still get a benefit, in other words, for a charitable donation of, if it's a cash donation to a qualified charity, up to $300 without needing to itemize. So that could be worthwhile to do. If you're not itemizing, you might be saying, hey, whatever donations I'm going to be giving, it's not as crucial to be tracking them due to the fact that you're not itemizing for taxes and it's not going to give you a benefit. But now we have this $300 in donations that can give you a tax benefit. So you do want to, if you're making any charitable donations, track that, make sure you have the reference to that and take, the tax benefit for the donations that you have. So cash donations include those made by check, credit card, or debit card. Before making a donation, people can check the special tax exempt organization tool. There's a link to that here on IRS.gov to make sure the organization is eligible for tax deductible donations. So obviously when you make a charitable donation, especially this time, at this point in time, with the holiday season approaching and with the COVID-19 things happening, there's scams and whatnot related to charitable organizations as well. You want to make sure that you're giving to a quality organization, a good organization, so that your money is actually doing some good. And then if it is going to a quality organization, you should then most likely get a tax deduction for it. So one way to check if it's a quality organization would be to say, hey, have they done all the steps to make sure that they qualify to be a charitable organization? And you could check them out here at the tax organization search tool for some information on that. So the Coronavirus Aid, Relief, and Economic Security Act changed this law. The CARES Act also temporarily suspended limits on charitable contributions and temporarily increased limits on contributions of food inventory. Report any name or address change. Taxpayers who moved should notify the IRS of their new address. There's a link to notify the IRS here. They should also notify the Social Security Administration of any name changes. So if there's a name change, possibly through marriage or something like that, then you want to notify the Social Security Administration so that when you file your taxes, if you have a different name on there, the IRS is going to get confused. And you don't want to confuse the IRS. That only causes long bureaucratic problems. So you want to make sure you have all that set up to save some time in the long run here. So renew expiring ITINs, ITINs. Certain individual taxpayer identification numbers expire at the end of this year. Taxpayers can visit the ITIN page. There's a link to the ITIN page here on IRS.gov, IRS.gov for more information on which numbers need renewal. Connect with the IRS. Taxpayers can use social media. There's a link to the social media here to get the latest tax and filing tips from the IRS. The IRS shares information on things like tax changes, scam alerts, initiatives, tax products, and taxpayer services. These social media tools are available in different languages, including English, Spanish, American Sign Language. Find information about the retirement plans. IRS.gov has end-of-year find tax information about retirement plans. There's a link to the retirement plans here. Obviously, at the end of the year, retirement planning could be a key thing that you want to basically be considering to have. They could still have a tax impact, even though it's kind of like the end of the year. So that's one of the last things that we kind of make sure that we wrap up at the end of the year, possibly doing a projection and then thinking about, what we could do with the retirement plan to maximize our tax benefit for it. So this includes resources for individuals about retirement planning, contributions, and withdrawals. The CARES Act Retirement Plan Relief, there's a link to that here, waived required minimum distributions during 2020 for IRA and retirement plan accounts. And that's going to be a big kind of thing here. So if you got required distributions and you don't need them possibly for living, but they're required to be distributed and therefore could be counted as income, it might be possible to not distribute them and not to be charged the income, not paying the taxes on it, if they waive it. So if you're in that kind of situation, you might want to check in on that before the end of the year and make sure that that you're maximizing your tax planning related to that. Also, eligible individuals can take a coronavirus-related distribution of up to $100,000 by December 30th, 2020 and repay it over the 3 years or pay the tax due over 3 years. So if people need money, obviously during this time, if you have business problems, possibly business not going well, need money at this point in time to keep going forward, one thought would be, well, I have money in my retirement plan. Could I take money out of the retirement plan? And so you might want to, if that's going to be something you want to look into, usually you would be penalized if the money was taken out of the retirement plan. So you want to see if you can take the money out and not be penalized for use during this time, because obviously it's a necessary time. So let's read that over one more time. Also, eligible individuals can take a coronavirus-related distribution of up to $100,000 by December 30th, 2020 and repay it over 3 years or pay the tax due over 3 years. So you're kind of taking a loan basically out of your retirement plan to cover this point in time with which you might need the money for, and then paying it back into the retirement plan. And if you do so, then the idea would be you're not subject to the 10% penalty that would result from taking it out, or possibly you can take the money out and possibly pay the taxes on it. Why would you owe taxes on it? Because if it's in a retirement plan, the idea was that you got a tax benefit when it put it into the retirement plan, and then when you take it out, you're going to be taxed on it. Usually that would not happen until the retirement, but because there's a crisis now, they might say you could take the money out and still pay the taxes on it possibly, but you're not going to be penalized for pulling it out early, which would be like a 10% penalty typically. So if that's something to look into, then you can do some more research on that. Contribute salary deferral. Taxpayers can make a salary deferral to retirement plan. This helps maximize the tax credit available for eligible contributions. There's a link to the tax credit available for eligible contributions here. Taxpayers should make sure their total salary deferral contributions did not exceed $19,500 limit for 2020. Think about tax refunds. Taxpayers should be careful not to expect getting a refund by a certain date. So oftentimes we tend to want to spend our refund before we get the refund, and that's kind of a risky thing to do, because really until you get the money, then it's not, I wouldn't totally count on the refund, although we need to do that sometimes. And even then, the IRS can audit the tax return like within 3 years. So, but in any case, you want to make sure that you don't overspend basically the refund. So before you get it, or think that you're going to get it at a particular date, because if anything happens and the IRS has to take more time, then that can delay the refund. So they have the average time period in which the refund will come, but that doesn't mean it will necessarily come in that time period, because that's just the average. They could come a lot later or a lot sooner, and if there's a problem holding something up, then it could delay the refund. So this is especially true for those who plan to use their refund to make major purchases or pay bills. Just as each tax return is unique to the individual, so is each taxpayer's refund. Taxpayers can take steps now, there's a link to steps now, to get ready, there's a link to get ready, to file their federal tax return in 2021. More information about Schedule A, Form 1040 Itemized Deduction, Tax Topic Number 500 Itemized Deduction, Charitable Contributions Deduction, and Interactive Tax Assistance. There's a link to those items here. There'll be a link to this in the description.